Hello everyone. Today we're going to have a brief market recap, then talk about the Japanese inflation data, U.S. consumer confidence and wholesale inventories, and the upcoming UK housing market data. This is Marshall Gittler, head of investment research here at FXPRIMUS, bringing you the Week in Focus. Well, as we start this holiday week, most currencies are little changed from Friday's levels. The commodity currencies are weaker after Chinese President Xi Friday indicated he'd accept a slower growth rate than the 6.5% rate that the country's been targeting. That's weighing on the Australian dollar particularly. The Canadian dollar weakened after the country's October GDP unexpectedly fell. The news follows the recent decline in core inflation in Canada to the lowest level since 1996. Apparently, the government's fiscal stimulus isn't succeeding. Gold and oil gained. Although gold was higher on Friday, it ended the week lower for the 7th consecutive week. Oil gained despite the U.S. rig count rising yet again. This week, it'll probably be quiet as the Christmas holiday continues today in the UK and several of the former Commonwealth countries. For the rest of the week, there are no major indicators out, only second-tier data, and no scheduled speeches by central bank officials. The only major indicator out this week is out already. It was Japan's CPI, consumer price inflation data, which came out overnight. The numbers were as expected or worse, with inflation rates generally decelerating. The report puts additional pressure on the Bank of Japan to keep its policy accommodative, which is negative for the yen. The U.S. indicators dominate for the rest of the week. Most are expected to be favorable. The Conference Board Consumer Confidence Index is expected to rise further. That would suggest Donald Trump's election had a positive effect on consumer sentiment. Wholesale inventories are expected to rise, which would help to boost growth after several months of destocking. That would add to the positive outlook for the dollar. There aren't any major EU indicators out during the week. The UK releases some housing market data, specifically the British Bankers Association mortgage lending data on Wednesday and the Nationwide Building Society House Price Index on Thursday. The forecasts are for some improvement. More mortgages were taken out and house prices rose. The news could be good for sterling. Finally, Australian private sector credit growth is expected to Australian private sector credit is expected to continue to grow at the same pace as in the previous month. That's good for the Australian dollar in theory, but over the longer term, what happens in China is probably more important than domestic factors for swaying the Australian dollar. This is Marshall Gittler, head of investment research at FXPRIMUS. Get more market insights on our education pages and turn your trading ideas into action with FXPRIMUS, the safest place to trade.